Hey, this is Tracy Dellinger with Prime Mortgage Lending in Lincoln. Just wanted to discuss with you guys. I take a lot of applications and I see a lot of credit and I see a lot of common criteria with credit that is affecting folks' ability to purchase a home loan. And I just wanted to review with you guys, do some short clips on credit scoring, what makes up your credit score, how you can work on your credit, some things to do and not to do. So this will sort of be a series of videos, but the first one, let's start out with credit scoring. I know that many people probably look at Credit Karma to get their credit scores, or maybe through their Capital One or other sources at the bank. And what you need to know is that not all credit scores are created equal. There's typically a set of credit scores for when someone's pulling your credit for a credit card. There's a set of scores that are reported for if you're doing an auto loan, or if you're doing a mortgage, we use a different set of scores. And what happens is you still have your three major credit bureaus, which is Equifax, TransUnion, and Experian. But within those credit bureaus, there's multiple scoring models. So like I said, each type of credit that you're applying for would utilize different models in there, and some are more strict on certain criteria than others. For mortgage lending, or let's just say your Credit Karma, you might say that your scores for Credit Karma are in the, it's 620 or 640, but we're not going to pull the same scores. Typically, if you're getting those type of scores in Credit Karma, ours are going to be a good bit lower, probably in the lower 600s, maybe high 500s. So really, if you're utilizing the Credit Karma, then you probably need to have at least, I'm going to say, 650 or higher on your Credit Karma in order for ours to, come into the benchmarks that your mortgage loan programs are looking for. But let's talk a little bit about your FICO scores, which is what we're using from Equifax, TransUnion, and Experian. We're going to take, and any mortgage lender is going to do this, you ignore the highest score, you ignore the lowest score, and so you utilize the middle score. So you're not averaging or anything like that. And so as far as how your credit scores are made up, your payment history is 35% of your credit score. So that's whether you've, paid past credit accounts on time. All of that is making up 35% of your credit score, which is, when you look at a piece of a pie, and I'll post this too, that's the larger piece of the pie. The amounts that are owed makes up 30% of your credit score, so we'll discuss that later in another video. Your length of credit makes up 15% of your credit score, so it's important to have longevity. New credit and credit inquiries only make up 10% of your credit score, and your credit mix also makes up 10% of your credit score. So we'll discuss those in further detail in a later video. I just think that it's something that everybody needs to be aware of, is that there are different credit scoring models and what makes up your credit score. So later on we'll go into the do's and not to do's and things that maybe how to improve your credit, so that one of these days or very soon you can become a homeowner and purchase your own home. Or this is really for any large purchases, vehicle, everything. Credit scores affect lots of different things, such as your interest rate. So it's important to get the highest credit score you can, so that you can get qualify for the best interest rate, the best terms for the loan, etc. All right, I'll see you here soon. Thank you for joining in. Talk to you later. Bye-bye.